Every dollar that you give above interest, you're telling to the bank, listen, Mr. and Mrs. Banker, Mr. and Mrs. Wachovia, because I don't trust myself with my own money, because I haven't taken self-responsibility for my own finances and how to invest my money, I'm going to give you this dollar for you to invest for me. And then when I need it back, I'm going to qualify for this by answering your questions and justify why I need my money back. Does that make sense? Now, this is an example of arbitrage at work. Okay, you go with your $100,000. You sold some real estate. You have an inheritance. You have a severance package, right? You go to the bank and you put it in the bank, and you're earning in your checking account. In this example, 2.5%. Pretty good, right? So you put $100,000 in there, and then at the end of the year, you receive $2,500, and hopefully that's not taxable, which it will be. Unless it's inside an IRA, which, by the way, you can't put that much money inside an IRA anyway. So you know it's going to be taxable. Okay, and then you go to this side of the bank to borrow money at 4.2. Whose money are you borrowing? Basically, right? And every other checking account customer that's there, which is fine. That's the banking system. That's what it was designed for. It's just that many people didn't know the rules of becoming their own banker. So for some of you who have been putting money in the bank for the last 10, 20, 30 years, I'd go over there and I said, you know, this chair right here, I think I purchased this with my equity. I'm taking this home. It's mine. Oh, if I was security, too bad for it. Local bank, checking savings account, 2.5%. Woohoo! Savings account, 2.5%. A 1-year CD, 2.5%. What's the inflation rate nowadays, folks? 3, 4%? Okay, 6. So you're behind the cost of inflation, so therefore your money isn't working as hard for you. So that gallon of milk, that gallon of gas, it amazes me that it costs more for gas than it does for milk or water or coffee, right? Now here, when I'm borrowing money, same thing again. This was just taken today. Home loans, 4.24% line of credit, 30-year fixed mortgage, 6.12. Can you beat that, Wachovia? Listen this way. I'm sure they can. But did we say that interest rate is the main determining factor of the true cost of a mortgage or choosing the right mortgage? Does it really matter as you're going through this progression of what the interest rate is? The question you should be asking me, Matthew, what's the rest of the story? If I'm borrowing at 6 or borrowing at 7, sure, it may not be what I'm thought to believe about money. Well, what am I earning for borrowing that money? Can I flip this around? Can I be the one that borrows at 7 and earns 8, and earns 9, and earns 10? Can I be that type of person? You don't have to be the one that settles for a 2.5%. Now there's times for having money in the bank. There's times for having money in the money market account. There's times for having money in a CD. But it's not for everything. Figure out where you can earn a higher rate of return to match the rate of inflation, to take advantage of what's happening in our economy today. You know, everything right now in our economy is on sale, especially real estate, right? Especially real estate. And real estate is one of those weird things when it's on sale or actually wholesale, nobody wants to buy it. Okay, let's take a look. If you had $1 million of equity, what just happened to your equity? Right? What would you rather have in an emergency situation? $1 million of equity or $1 million of cash? Because if I had my cash, $1 million earning a rate of return, and I didn't even touch it, even if I was earning 5%, what would that be giving me every year? $50,000 a year? And I'm not even working for it? Okay, let me show you another example. What happened April 18th, 2008? Boom! Right? Right? I got sand in those things. Did you feel that thing? There's a ghost in the household. Lord, I pray for this ghost to come out in our house. Oh Lord, the spirit in the name of Jesus, go away. No, that was an earthquake. It was an earthquake. It wasn't a ghost. It wasn't a spirit. That was a tornado that hit Chicago. And here's the worst part. What were we doing? We were sleeping. We were sleeping. Some of you weren't sleeping. But most of us were sleeping. Now, what happens is when we're lulled into security, right? I've been in this business long enough to see the stock market boom in the late 90s. I've been around to see the stock market crash in early 2000. I've been in this business long enough to see the real estate boom in the early 2000s, and I've seen the real estate crash in the mid 2000s. Okay? Now, many people we're falling asleep at the wheel, because before, when things were good, anything they threw the money at, dartboard, you got this piece of property, you got this mutual fund, it was easy. It was easy. I was flipping properties and doing this and that. Right now, the cream is rising to the top. And guess what? I congratulate you all, because you're here getting more knowledge and education. And the Federal Reserve Bank applauds you as well, because this whole week is dedicated to increasing everybody's knowledge of personal finance. Allow them to get it in.
I'm going to take advantage of going to do it tomorrow. The first thing I'm going to do is I'm going to check my house. I know I have equity there. I'm being too stupid to have it there without doing anything. So the first thing I'm going to do tomorrow is check my equity.
Very enlightening, very informative. I mean, I just learned a lot that even I didn't know, as far as even taxes and the savings and deferring the taxes and so forth. I mean, I'm going to go home and look through the tax code and see if I could get some equity out of the house. Even though I think I knew the tax code and so forth, but a lot of strategies that I didn't even know about.